This is TWiT.
The S.E.C. is investigating. This is a good article from a New York Times Deal Book. New rules a year after the meme stock frenzy. Now, they're not going to say you can't buy GameStop stock. They're not going to say what you can buy or not. But what they are concerned about is what happened with Robinhood. A number of retail brokers, including Robinhood, during the rally when GameStop was going up, halted trading, right? Or limited how many shares you could buy. And at some point, I think some of them said you can't sell your shares. And as the shares started to crash, that pissed some people off. A number of hedge funds also lost a lot of money. So, but they're not going to outlaw meme stocks. You can't, right? That's insane. But what they can push for is a change to the rules on something called payment for order flow. And we talked about, this is a complicated story.
Explain it to me, boss.
Forgive me for launching this. I wish Stacy were here. I could blame her. Stacy, what's payment for order flow? Because she's so good at that. So I will pull a Stacy and try to explain it. We've talked about this before with Robinhood. Why is Robinhood free, you might ask? Right? How can you have a stock? I mean, traditionally when you buy stocks, you'd pay a commission. You'd pay Schwab a commission, right? Mm-hmm. All of a sudden, along comes Robinhood.
And wait on the process. And it's not like instant either.
Along comes Robinhood, which people have celebrated because it democratizes stocks. It's free. I want to share that stock. You pay for the stock, but you don't have to pay a commission, which makes it's one of the reasons there's volatility, because it doesn't cost. If it doesn't cost you to do a transaction, you might buy and sell, buy and sell, buy and sell, buy and sell. So how does Robinhood make money? And we talked about this a while ago on the show. They make money because they don't execute the orders. They sell the right to execute those trades to bigger firms, to wholesalers like Citadel Securities. They sell, so they charge a commission in effect, not to you, but to Citadel. Well, why would Citadel pay? Because now Citadel gets, this happens all instantly, right? Gets fast signals about stock movement and can buy or sell trade on their own accounts and make money because they have advanced warning that a lot of people are buying AMC. Mm-hmm. So Citadel is in effect, you have an advantage in the stock market if there's an information gap. If you know more than the other guy, you can make money. That's what they're paying for. And that's what Robinhood is using to fund their business. It is problematic because the information inequality is not between Citadel and, Merrill Lynch. It's between Citadel and you.
Right.
So you're, and in fact, even Robinhood users might be paying more for a share of that stock than they should be because of this process. Citadel might, in fact, end up saying, well, the price for that stock is $1.30 when it's really $1.25 if you went some other way. So there's all sorts of problems. It does disadvantage less well-informed players.
Well, how is this supposed to remedy that
scenario? It makes it illegal.
Okay.
But it would also probably put Robinhood out of business.
Right.
Or they would have to start charging for commissions for transactions. Brokers would need to develop new business models. Some major wholesalers told the Times that the S.E.C. had refused their input, but the big trading firms argue the reported fix would only hurt the little guys. Former S.E.C. chief economist S.P. Kotari told Deal Book, the view is that payment for order flow somehow compromises market integrity, but the evidence shows retail investors are getting a good deal. Not sure about that. Not sure about that.
Let me question.
Yeah.
Going way back, you needed a street next to the wall where people traded stuff, and you had to have somebody there to do it.
Hence the name Wall Street.
Hence Wall Street. But there's no reason you need a broker technologically today.
Well, yeah,
at
you
all.
do.
What does a broker
Yeah,
do?
you do.
You do, because you have to have somebody who is licensed to buy and sell
No,
stocks.
that's what I'm saying. Technologically,
Oh, no, but,
there's no
but
reason
that's how
you
it
couldn't put
works.
up a marketplace.
Well, oh, I see. Yeah, you're right. Just like you buy anything else.
Wait a minute, what now?
You don't need
Exactly.
a middleman.
What do you say?
You don't
He's
need a
saying
middleman.
You don't need a middleman. Right now, you do. Legally, you have to. You pay a lot of money to have a seat on the New York Stock Exchange so you can buy and sell stocks. But that's just an artificial construct.
It'd be
because everything's.
and it'd be like if you needed an agent to sell your thing on eBay. No, you just go to eBay and you sell it directly.
Okay.
It's a marketplace.
All right. Okay.
Yeah.
I mean, God help me, NFTs.
So there is a good point, which I guess Qatari is making, which is people who couldn't or wouldn't buy stocks in the past because of commissions, and commissions used to be a lot higher than they are. All of this has pushed the commissions down anyway, and a lot of big brokers like Schwab now offer commission-free trading as a result, just to compete.
I was just going to mention, I don't know if commissions was the actual problem. I think it's easier now because you get to buy portions of shares.
Well, that's another. That's something that they do. That's an interesting one too, right? Especially if it shares $1,000 and you have
It's $1,000 piece of I don't know, say Nike or whatever,
Right.
whoever, and you. Average Joe probably can't afford it, but they want a piece of that pie and say, let me send $20 here and $20 there. And
I'm honestly not. I mean, this is very elitist, but I'm not a big fan of people buying individual stocks, and it really
Right.
comes down to that information disparity. I
agree with you.
You as an individual,
They don't know.
you, and we don't have the information that institutional investors have, and that's who you're competing with. And,
I agree.
And so I think you're always
regular
gonna,
folks should look more into. Well, I'm not going to say because that would sound like I'm giving advice. Never mind.
You can give advice. Just say, "But I'm an idiot, so don't pay attention," or something. That's what I say.
I think is more along the lines of looking at different funds.
Yeah, people
and
look at index
what's the
funds.
phrase?
Absolutely.
Diversity.
Yeah.
Yeah.
For investing in your retirement, I love the target date funds. Those do a pretty good job. They rebalance your portfolio as you get older to lower risk and all of that. But in any event, that's always information is the whole thing. Remember what a great book by Michael Lewis. Was it Flash Boys?
Flash Boys. It's just so brilliant. Yeah.
And he talks about the race to create a fiber optic line from the Chicago Exchange to the New York Exchange. But fiber optics, speed of light, right? But
Yep.
they were trying to create a path with a completely straight line because a turn
No
makes it a little bit
bends.
longer, and a millisecond, a millionth of a second difference with computerized trading can be the difference between winning and losing. So if you could get a completely straight, shortest distance between 2 points from the Chicago Board of Exchange to the New York Stock Exchange, or actually it's not the New York Stock Exchange anymore, as Michael Lewis pointed out, some place in some windowless building in New Jersey. But if you can get a straight shot, you might have a millionth of a second advantage over somebody else, which is enough for you to win, to make money.
So the characters at the beginning of the book are just great. They're literally going to people who own property to say, "Can I dig a hole here? And here's what it's worth to get the straightest line."
Yeah.
Which is to say that Bloomberg and Reuters and those companies do not sell content; they sell speed.
Yes.
And once it's the former head of Reuters used to say that after the first 3 milliseconds, all of Reuters' content is an aftermarket.
And this also points out with something what I always have this debate, that it isn't really about the quarterly report or R&D or any of the numbers that we are always talking about. The value of the stock really is what somebody will pay for it. So having knowledge about what price people are paying a little early, it's like knowing who's going to win the race a little bit early. You can lay a bet on that horse a millisecond before it crosses the line. No, because it already crossed the line. A millisecond before anybody else knows it crossed the line. That was the whole premise of that Paul Newman, Robert Redford movie. What was it? It was a Great Con. It was a wire.
Oh,
con.
right. Yeah.
Is that they knew ahead of time who was going to win the race. So they lay a bet, and then the results would come in a second later, and I won. It was the same scam. So you win in the stock market now, not the sting. You win in the stock market now, not because you've been reading the financials very carefully. I mean, you can. I mean, obviously, that's what the Wizard of Omaha does, but Warren Buffett. But really, what's really happening is he's hyper fast stock trading, and it's done very, very quickly, and it's done on information. And the only information that really matters is what people are going to pay for this stock a second from now. Yeah, it's
speculative.
Yeah, it's fascinating. But it's also why I think individuals. I don't know. I'm not giving you advice either. I'm an idiot. But it's what I tell my kids, because they have to listen to me, is you can't win that one. Because you're not an institutional investor. You don't have a fiber optic line to the Chicago Board of Trade.
That's right.
Somebody doesn't like me. It doesn't like this. Stop spreading false info, says Web4338. I don't know which particular false info. Yeah, tell me what's false, and I'll tell everybody what you say. All transactions, including computer trades, have to go through a dealer. Didn't I say that? I think I said that.
Yeah, you said that.
Yeah, he did.
I was asking why that's theoretically why that needs to be the case. Right. What value do they actually have?
Yeah, but
they extract value. The part of the point of this story is
the middleman.
The middlemen are, as always, are extracting value more than they're adding it.
He says, "You are misinformed. It's explicit in Series 9 and 63 broker exams." Okay. I think you're making it up now. Now I think you're making it up. Anyway, the S.E.C. takes it seriously. They're about to... S.E.C.'s Gary Gensler is expected to preview new market rules about a year after shares of GameStop and others shot up in the meme stock trading frenzy. It's not to make those illegal. It's to... And I knew when I launched this that it was going to take a lot of explaining, but it's to stop this payment for order flow. And it is controversial because it does allow more people to get in the stock market, which I would submit is something that maybe should be phrased as allow more suckers to get in the stock market. It's something only the guys the institutional guys want. Yeah, we want more suckers.
More people in, it pushes their wallets bigger.
Yeah.